What is up, guys? So, this is going to be the first part to a two-part video about taking profit and the art behind taking profit. It truly is an art because there's so many different levels but to trading. You have to get a pretty good entry. You have to manage to not get stopped out. So, you have to be able to justify your stop loss. And then, even if you make it that far, you have to not paper hand the trade and really make that winning trade go the distance, right? To account for any losses and trip ups of entries or getting wicked out on a trade or whatever. You really have to make sure that you nail that taking profit part. So trading is pretty hard, right? There's so many different layers, but this is how I take profit. And first, you have to kind of attribute a context to the situation, and the best way to do that, and I always say that context is a mixture of volatility plus time frame. And the way that you can attribute a context is you start off on your high time frames, right? You just kind of draw out some levels. So this is when we're taking profit. This should be a gray box. This is when we're taking profit at levels just any time that we've already traded. Not talking about price discovery. The second part to this video will be about price discovery specifically because it's a whole sort of different take and attributing context there. But essentially, just want to mark out some key levels on high time frames just to give ourselves general ideas of a massive zone of resistance or support on that time frame specifically, right? So generally, anything that's on a higher time frame, you're going to give it a bigger merit, right? So if you're trading a low time frame trend and you come up into this massive zone, then I would imagine you're probably going to take off more profit than if you're testing, let's say, a 15-minute resistance, right? So when you're scaling your take profits and you're thinking about how much to take off, just something as simple as giving yourself a context, right? Uh, can be the major difference between paper handing an amazing setup or printing 10R on a trade, something ridiculous, right? So just go ahead and mark out some other key levels, right? We maybe have something over here straight across, and then you could say we might have something over here, right? Again, these are just arbitrary. No one cares, actually. It's just levels, right, to work with. But you just kind of have to keep in mind that when you zoom in, right, these are levels of significance. So when we come up into the zone, you just drew that on a daily time frame. It's probably a key zone, so we might see some trouble at that region. So it's probably a good idea to take some profit when we get there, right? The context behind that is you are trending, right? The volatility of this trend on a high time frame when you're breaking out of key zones, when your market structure on the daily is flipping bullish, right? All these kinds of things. When all of that is happening, but you can only see that happening on the 15-minute time frame, right? Something incredibly zoomed in because the price action itself is extremely volatile. It's moving parabolically, right? You're giving yourself a context. So if that is the case, then maybe, just maybe, when we get here, it's a good idea to scrape off some profit, right? Um, just because of the extremity of that trend and the context of the situation is, oh, if we break down below this key level, or if this rejects us and we see a big breakdown, this is all going to fully retrace. And it's like, yeah, you're absolutely right. So account for that, play it as such, right? The trend is still trending. So the same arguments that got you here are still valid, just the same during all of this price action upwards, during this top, that top, even during this lows, right? You only had one real bearish argument that formed. And then truthfully, it didn't even matter all too much. So let's go ahead and look at that price action, right? So if you're using something like 15-minute 200s to portray that local trend, this is really the only time where price action starts to go bearish. So that means that you're giving yourself a context behind it, right? You're attributing relevancy to this price action via trends, and you're acknowledging that volatility, right, by zooming in to a lower time frame, and you're understanding the higher time frame big picture where things are in relativity to massive demand zones, massive supply zones, right? So I would imagine, let's say that you don't draw the gray boxes the same way that I do, and you just see this as thin air, right? Let's say your resistance level is all the way up here. Well, because you gave yourself a context, and the argument that you made this entire run upwards is, although it's still valid, it's not as valid as it was anytime during this trend, right? Here. It's not as valid anymore because we're breaking down below that low time frame trend. So I would imagine if your gray box is drawn, let's say 5% higher, it's all the way up here, and you're waiting to take profit when we get to that massive, high time frame resistance level, but this happens, I would imagine you're going to cancel some of this TP or at least modify it and only keep half there and sell the other half here or whatever the sort of balance that you need to find given that situation individually, right? Via your portfolio, via your market exposure, all these kinds of things. This is why profit and taking profit is pretty difficult because there's a lot of variables that go along with it, right? How exposed to you, or I'm sorry, how exposed are you to the market overall? And just all these different kinds of things, right? And where is your entry along this trend? Did you get an entry initially, or did you just so happen to enter upon this breakout and you don't really have as big of a luxury in terms of drawdown potentially into, let's say, our next high time frame trend before you start to get back to like your break even or maybe even risk a stop out, right? So if you entered here and you're looking to take profit here, right? Versus someone who entered here and is also looking to take profit here, you're probably going to play this way differently than you would play this, right? So again, it's all about context. You kind of have to think about this stuff, right? So maybe if you're the person who bought the breakout here, when we lose this local trend, you're up a lot and the next sort of level to pay attention to is your entry, right? And it's like, oh, now we threaten retracing all of these unrealized gains back into what initially allowed you to enter into that price action in the first place. And maybe, just maybe, we just get super insufferable and make you seethe, and we just don't even hold that and we just kind of keep going, right? And now you just saw a bunch of unrealized profit, you didn't really take action here, and you just kind of let it retrace, betting on the higher time frame trend and eventual reversal, and obviously that doesn't happen, and then you get screwed, and now things are massively harder to navigate because you're emotional because you saw green and you had to accept red, right? So it's like you have to kind of be aware of this stuff, just attributing a context to the situation of the asset and then considering your own personal situation. I always say that trading is a mixture of three things, and that would be probabilities, right? Or how I like to say it, perceived probabilities, because we don't have the luxury of like this is blackjack and there's always a 52 card deck and we can count cards, based off of how many face cards are on the table or whatever, right? We can't really do that. We can't give ourselves a sort of standard deviation of probabilities. So you have to perceive those probabilities, right? And then there's risk reward, and risk reward is very simple because it's tangible. It's just this little number right here, right? So that's one. Oh, look, now your risk reward is 2.3, right? So the trading view, whatever the long short um, graph, I don't know, but that thing, right? It shows you your risk reward. And then what you have to account for is your own personal situation. So when you're considering taking profit, think about the context of the chart. So think about the volatility plus the time frame, right? We're trending on a high time frame, but not even across 15-minute 200s during this point of the rally, right? It's probably something more like 5-minute 200s. So consider that, take that into account, and then adjust accordingly. And think about how are you positioned, what's your overall, market exposure, all of that kind of stuff. This goes way more in depth when we start to enter price discovery because it's not as simple. It really isn't. This is actually the easier part of trading, where you have clean levels to work with, and you just are attributing merit to these different levels, right? So maybe you're able to say that this region is a local resistance zone and you already have that marked out well before we come up into this region, right? Let's say there's price action that looks like this that allows you to be able to draw this box well before we come up into it. Well, are you going to take as much profit here if you're trading a 15-minute 200 MA trend on the daily? Right? Are you going to take as much profit when we get to this measly little 15-minute resistance level as you would when we tap a weekly zone of resistance? It's like, well, probably not, right? So you want to attribute context, and the way that you will do that is by scaling your assumptions and thinking about what is the implication of a certain level, right? So a great example of this, and something that I sort of forecasted we would be the downfall of many people for over a year. All the guard dogs that barked at the wind and tried to call for bottoms and whatnot. Pretty much said, "Hey, this is a fruitless labor. You're gonna, the same sort of greed and emotions and succumbing to your own emotions and lack of discipline, all that stuff, the same things that made you want to catch a bottom so damn bad are going to be the same things that make you paper hand as soon as we actually do bottom and reverse very strongly off of that bottom or break out of a massive range or whatever it may be. That's going to be the same sort of emotions that totally takes over. And honestly, that is exactly what I saw on my crypto Twitter timeline. Right, the irony of the situation is I got poked fun of for being bearish at the bottom and telling people, "Hey, maybe just don't try and call bottoms and adjust later." This is where I make an adjustment, right? And I post about it, and I'm telling people, "Hey, the context. If this truly is a major rally, then it should just be getting started. If this is even half of what it's supposed to be or what is being hyped up to be, then really opportunity is massive, and what you've seen thus far will be minuscule in comparison." And then we go on and we start to break out of a key level, right? This is a major zone, so when we tap this major zone on a high time frame and we're trending pretty parabolically, given that the context prior was 3 weeks of a 2% range, right? And here we are breaking out of that range, and in 2 or 3 days we have a volatile range of like 10%. Well, what happens when we reclaim this zone, right? And it's like, if you know anything about range trading, then when you deviate towards either side of the range, you would typically just expect the opposite side of the range again, right? Or range resumption, which implies, right, range highs, mid-range, range lows, mid-range, range highs, mid-range, range lows, right? So when you deviate, you anticipate, oh, range highs, mid range, range lows. Oh, look, that's a deviation, range lows, mid range, range highs, right? So do I really care about the mid range as much? Do I really care about the 200 daily moving averages as much? Do I care about a 4 hour supply zone right here as much? Do I care about? And it's like, no, I don't care, because the context is we're trending extreme, right, on extreme time frames for an overall grand scheme, right, 20% range, right? That is the context of that situation. That is how you're able to justify, okay, my main take profit levels are going to be here, right? And if, oh, look, there's a random stupid little green line here, the 200 daily moving average. All right, let me take not nearly as much profit off here as I did here. And oh, yeah, this is mid range. We might find some resistance. Okay, let me scrape off another 5, 10%, whatever. Oh, yeah, this is another stupid little blue line. Let me scrape off another 5, 10%, whatever. Oh, this is range highs. We could very easily just continue ranging, right? And just go sideways in a 20% range. And do I want to, just watch as all this profit goes negative 20% unrealized? No, not really. It's a pretty high merit worthy level. So let me take off a good chunk of profit. Oh, we're breaking out above the range. Oh, okay, we're probably going to continue expanding. Good thing I didn't capitulate, right? Good thing I didn't try and call tops now to the overall uptrend, right? I'm just sitting here and acknowledging, hey, we're trending along X, Y, and Z levels, and here are some key resistances that might give us some trouble, or even maybe at worst break those trends eventually, right? Because they're trends, they're not permanent. So they will break eventually. It's just a matter of when, right? And yeah, so maybe I should acknowledge both sides of the argument. And if you're able to acknowledge both sides of the argument, I would imagine you play it as such. The trend has not broken once since this entire rally started. And I would argue it started from a meaningful level at around 17.4K, right? And I put out the video and whatever, right? So this isn't hindsight analysis. It's all there. It's for everybody to see, right? It's on the internet. But truly, it did start actually even before that. It just wasn't meaningful to me, right? Because the context was, if you're flipping bullish here upon these 4 hour 200 MAs reclaim, and the breakout above this 2% range that we traded in for about 3 weeks, right? Then your next level that you have to take profit at because of that context, right, is this resistance zone right here. And it's 2 or maybe 3% higher, right? So it's like, it's not even that relevant. And 2 or 3% higher, and then you have to take off some profit. Whereas I just kind of neglected this 2%, entered here, and then I scaled those assumptions. I attributed that context and I said, all right, well, number is going up. Even little Timmy, the 4-year-old, can tell me that. And yeah, what are my key levels? And it's like, okay, well, here's a key level, a really, really key level. Same analysis I gave this time around, too, right? Obviously, I'm not the genius who sells the exact top, right? And gets to claim clout. Oh, I bought here on the breakout and sold everything, capitulated at 18.4 exactly. And now we just retraced in the next day or two. I'm never going to be that person, right? But when we go on to continue the trend, this is the reward, right? So, in my opinion, when you're taking profit, you have to find a balance as long as the same justifications that allowed you to be able to take that profit in the first place, right? To have profit to be able to take, that is a luxury. As long as the same justifications that got you there in the first place are still valid, you can't just suddenly drop your argument to just say, "Oh, we tapped this level and now suddenly I'm probably going to see everything just reverse totally, and I just need to capitulate everything here, drop the bag and walk away and hope and pray that we pull back deeper so I can buy cheaper again." And it's like, this is what happens, right? Markets tend to punish you with that kind of one-sided way of thinking. So as long as you're able to make both sides of the argument, you should play it as such. And truthfully, as long as your foundation for your setups are made out of concrete and not paper, then you should be fine, right? You should have that sort of conviction. Oh, we're uptrending. Here we are breaking out of these ranges for the past couple months. Here we are uptrending above the 4-hour 200s. Here we are breaking daily market structure. Here we are deviating back inside of a 5-month long range, right? Here we are reclaiming the 200 daily moving averages. Here we are breaking out above the range highs, right? So all of those arguments never went away. Every single argument that I just mentioned started from a small scale and it eventually just continued into an even greater argument. So why has there ever been a reason for me to go bearish? And it's like, oh, there wasn't, right? So why then, if I'm not allowed to be bearish because all the arguments are just continuously compounding on top of each other, why would I just suddenly decide that the same things that has allowed me the luxury of being bullish and being in spot exposure or swing longs or whatever since below 18K, why suddenly can I justify capitulating those positions, taking my profit, running away, and hoping and praying that your bear div plays out for the 18th time this time, right? And it's like, oh, I can't justify that because my foundation isn't made out of paper. It's not just, I didn't just wake up one day and say, oh, BTC is down -3%. Let me just throw a bunch of money at BTC, right? It's probably a good dip buy. No, no, no. I didn't just do that. I built these justifications. I watched as price action did something in a greater context compared to anything that it had done prior, right? And similar to actually exactly the same as this time, right? So again, I'm the person who flips bullish and takes some profit and continues to ride this trend. That also means that with this mindset, I was the person who flips bullish and does not take all of his profit and run away as he quote unquote should have this time around, right? So you have to find that sort of balance. As long as you're able to find that balance, you should be fine. As long as your setups are not made out of a paper foundation, you should not be entering into a position on a whim. And then somebody on Twitter comes and says, oh, did you hear about Bits Lotto? And how the SEC is going to hunt down Bits Lotto, right? And it's like all 8 people on the Russian exchange Bits Lotto are like frantic, and you're like, oh my God, let me paper hand my position, right? That's never going to happen because you have a concrete foundation as to why you're in the trade in the first place. So you can justify your next take profit level hitting because you've never been invalidated. the same things that got you there in the first place, right? So this is how I'm able to justify continuing to be bullish on BTC. This is how I'm able to justify my take profit levels and riding the trend. And um, obviously, when the trend breaks at this point, I do have the luxury of it's not really going to affect me too much by the time that the trend breaks, because I can gradually, the same way that I engineered into this mindset, I can reverse engineer it as well and start to take profit and scale out of my positions the exact same way that I scaled in to my positions. So it is that sort of a luxury until eventually you do get to the point where the same arguments you made that made you bullish for this entire rally upwards in the first place are no longer valid. At that point, you cannot justify being in the position anymore. You have now been invalidated, right? And then that's where you take your full profit and you walk away from the trade, and whatever you made is whatever you made. And congrats, right? And it's like that's the best way in the 6, 7 years that I've been in crypto that I've managed to find, navigating the market and continuously giving myself, not taking profit too early, not letting emotions just kind of take control of me, and being impulsive and saying, oh, I just entered to this trade, 5 minutes ago. I'm trying to swing trade an 80% push upwards into this take profit level, this weekly supply zone. But I just entered 5 minutes ago, and then we got a 10% 1 hour candle. And now I'm just going to capitulate the entire trade. I don't know what to do. I'm just up a good amount, and then it's like you end up selling, and then price continues, going out with your thesis, and then you try to ride that trend again, and then the trend breaks, so you take a loss, and then you just give back all the profits, and then you would have been better off just kind of riding the trend on the way up in the first place. And it's like finding that sort of balance, and navigating, not taking profit too early because of emotions, but at the same time not being too anal about things, not just oh, I'm just going to target 30K and I'm not going to take any profit until we get to 30K, right? You have to find that sort of balance between those two things, and that really is the key. So hopefully this video helps you attribute some sort of context to the situation, be able to justify your reasonings, and validate your reasonings just the same, so that you are not taking profit too soon, as I foresee or foresaw many people would succumb to, unfortunately. And I think that probably is the case for a lot of people. That's not to shit on anybody, of course. Listen to me. Everything that has ever been covered by me, every bit of psychology, every video topic has affected me in some way, shape, or form, probably very deeply. And that's why I'm able to speak to it, right? So I've been there before. It sucks. This is how to get out of that sucky mindset. So I hope you guys enjoyed this video. There will be a part two, probably sometime early next week, and that will solely discover price. That will solely discuss price discovery and how I navigate price discovery. You can probably guess at this point it's a very similar system, but the levels that we have to work with, obviously, because we don't have the luxury of previous price action to work with, is a bit different. But relatively, the concept is exactly the same. So I hope you guys enjoy these videos, got some value from it. I hope you enjoyed this one specifically. Um, yeah. And you don't ever have to worry about taking profit, as long as you never make money. So maybe this video is applicable to some of you, but not others. It's not applicable to me. But yeah, thank you guys so much. I really do appreciate it. If you do want to support me, if you are getting value, of course, use my Bybit referral link. I said that like 18 times, probably in every video ever. But that is the greatest way to support me. So for those of you that do that, I try to give back to you when I can. PS5 giveaways, iPhone giveaways, all that kind of stuff. But yeah, thank you guys so much, and peace.